Let's bring in Bryan Spillane, Managing Director at BofA's Securities, covers household personal care. We check in all the time on these stocks. There's like always something big going on. So now that we've resolved all the shortages, all the COVID problems, evidently the egg problems because the prices there have come down considerably. Right. Now we have this to contend with. How would you describe things across your space right now?
So as we've gone through the first quarter doing check-ins with companies, it's been soft. And that's true across really our entire coverage universe. Consumer pulling back a little bit, maybe there's some uncertainty, but what's been surprising is it feels like it started in January and it's extended all the way through the first quarter.
And you've said this is what you're hearing from companies, but staples have been an okay place to be. And in fact, I see a lot of trader notes talking about our staples, the new discretionary and all of these kinds of things. Right. Do you see that playing out?
So there's a little bit of a dichotomy. I think this is a market for consumer staples, right? We're looking for defensiveness, certainty, but at the same time, we're doing that at a point where the fundamentals right now appear to be decelerating. So it creates a little bit of a dynamic for investors in trying to really understand where to put the money, because not all seem as safe as they would normally be.
And a name, our mystery chart, we just had a couple of people guess it at the last second here. Clorox, this is one, it's not like it's done that well lately.
Right.
And yet you're arguing that maybe it should be better positioned than others because it's basically insulated from tariffs.
Right.
Why?
So I think for Clorox, part of the reason why we like it is because it's got a revenue base that should be relatively stable in an environment that is a little bit uncertain. I think the stock has pulled back recently more because there's been concerns about the comparison slowing. So sales, the sequential, that has more to do with what happened last year. They had an issue with cybersecurity, the affect shipments. But once it smooths out, it should stabilize, both in terms of how people feel about the comps going forward, and it should be positive for the stock.
Church & Dwight, you also think might be better positioned?
So Church & Dwight, right, really positioned well with their portfolio in terms of consumer affordability, right? It's not super premium products. It's also a management team that executes really well. And this is an environment where we think there will be some M&A. And Church has done a really good job over the years acquiring and creating value with acquisitions.
Where are the biggest problems? I mean, and there's so many different challenges to discuss. We were just talking about visa issues have even crept into some of the names in this sector.
Right. I think the biggest challenges right now are in beverage alcohol. The beer industry specifically dropped off unexpectedly again in the first quarter after a weak fourth quarter. I think that has some to do with this visa issue we were talking about. I think there's cohorts of consumers that are just not spending as much. I think we're now starting to see it in household product and personal care categories, which have been very resilient over the last 3 years, and now are beginning to kind of show signs of slowdown. It's a little bit of a head scratcher because these are a lot of products that we basically use every day.
I think it was Colgate that called out some weakness in the Hispanic population, which the fact that had percolated up to have a big enough impact that they mentioned it, I thought was interesting.
Right, and that's Fabuloso, right, is one of their biggest brands here, or one of their largest household product brands in the U.S. And I think Colgate saying something publicly that a lot of companies, I think, are still trying to get their arms around, so maybe less willing to say things publicly about it. But I think there's a cohort of consumers that is beyond Hispanic. I think it's visa holders, students, right, where there's just a general uncertainty, and we're starting to see some of that be affected.
So given all of this, would any of this argue for staples being less of a safe haven this time around?
I think if we think about it relative to just the world we're in, I'd say that there's still a safe haven, right? Whether Procter & Gamble grows revenues 3% or 2%, which is kind of the argument in our world and with hedge funds, ultimately, they're still going to generate a lot of cash flows. They're still going to pay dividends. So I think the large liquid consumer staples are still a place where investors would want to be if they're looking for a place to hide in uncertainty.